wonder how Minda's enjoying adjusting journal entries. Whoops.
In order to understand adjusting journal entries, there are fundamentals that you must know that Minda will now explain to you.
Minda, what are the assumptions?
Debits on the left, credits on the right.
What's the other assumption, Minda?
Liabilities and revenues are credits, while assets and expenses are debits.
Adjusting journal entries is so easy, even a 7-year-old can do it. That's the wrong accounting book.
Adjusting journal entries ensure that revenues are properly recorded under accrual basis. That is, when revenues have been earned but not recorded, and expenses that have been incurred but not recorded. Accrual basis of accounting can be seen in this example. If I paid Minda $20 to do my chores for January and February, and she tried to be sneaky and pay a friend to do it for $10 on February, under accrual basis of accounting, she will earn $10 per month, and expenses will be $5 per month. Adjusting journal entries needs to be done because the exchange of cash does not always coincide with the earnings of a revenue or incurrence of an expense. Minda states that there are 4 basic scenarios in which adjusting entries are needed for. This is when there is a deferred and accrued revenue and expense. Deferred revenue is when companies receive cash before they earn the revenue. The following adjusting entry shows a situation in which Minda has finally filmed her customer's commercial, so she no longer has a liability to her customer. Her unearned revenue is now replaced by a service revenue to get rid of the $40 liability. Accrued revenue is when companies provide a service and then collect the cash. The following adjustment entry depicts a situation in which Minda decided to be a clown for someone's birthday. She provided the service for $25 on February 3rd, but is paid on the 4th of March. Since the accrual basis requires the revenue be recorded in the period in which it's earned, the accounting firm must record the $25 of revenue on the 30th of February. I think it's time to check up on our little student.
Minda, don't run away! You still need to do deferred expenses! Minda!
Deferred expense is when companies pay cash before they incur an expense. An example of this type of adjusting entry includes depreciation. Let's say Minda determines that her machinery will depreciate by $15 in February. The following adjustment entry is needed. Accrued expense is when a company incurs expenses and pays for them later. A classic example would be an employee's salary. When Minda paid the employee $10 at the end of February to do her chores, the following adjustment journal entry must be made.
How you going, Minda?